Welcome to today's Environment and Energy Leader webinar sponsored by Sphera. My name is Jessica Hunt, and on behalf of the entire team at E&E Leader, I welcome you to achieve sustainability reporting excellence while mitigating risk. Please submit all questions for our presenters using the Q&A at the bottom of your console. If you have a question for a specific presenter, please indicate that during the time of asking a question. We will do our best to get to as many questions as we can, but if we do not get a chance to answer your specific question by the end of the event, do not worry, because a member from the team at Sphera will follow up with you as soon as possible. During today's event, attendees will have the opportunity to be a part of the discussion around the Corporate Sustainability Reporting Directive, better known as CSRD, asking questions, and the panel will provide as much feedback as possible. If you are watching this on demand, please feel free to submit questions as well. We will ensure that all questions asked post-live event will be directed to the team. And without further ado, I'm extremely pleased to welcome the panel from Sphera today, and I'm going to hand the presentation over to Sandy Smith, the EHS&S VP for the EMEA region. Thank you for being here.
Thanks, Jess. So my name is Sandy Smith. I look after Sphera's environmental health, safety, and sustainability part of our business for EMEA. I'm joined by two of my colleagues today, Anastina and Xavier, and I'd just like to get them to do a quick introduction of themselves. Should we start with Anastina?
Yeah, sure. So thank you very much for the introduction, Sandy. My name is Anastina, Senior Consultant at the Strategic Advisory Team within Sustainability Consulting of Sphera, based in Hamburg, Germany, and I'm happy to go through the webinar with you guys today. Thank you.
And my name is Xavier, and I'm leading the Solution Engineering Team in EMEA, and have been in sustainability for the past 20 years, helping all kinds of companies of all kinds of size. And I will just show some elements of what we can do during this webinar.
Great. If we could move to the next slide. For those who don't know Sphera, we're a leading software services and data business. We're trying to operationalize ESG as kind of our key message. Today we're going to talk to you about CSRD and provide some hot off the press updates of ESRS, which have come out very recently. So we're very excited to hear Anastina provide some inputs on that. We're going to talk about some of the challenges of CSRD, then talk about some of the top 3 digital considerations that we're seeing in terms of the marketplace and with our clients. Moving on to the next slide. When we're going out in the marketplace and talking to clients and talking to the various executives, we see these 2 twin mega challenges onto the marketplace. One of them on the right-hand side is to depict sustainability, and the other is digitalization. If an organization can master these 2 aspects over the next 5 years, I think they're going to be a very successful organization. At Sphera, we like to bring these 2 aspects together and have the digital approach support the sustainability journey. And I think bringing those 2 areas together, I think can provide a lot of successful organizations, both in the near term and into the long term as well. It sounds very easy, but in reality, as we know, it's amazingly complicated. Each one of these challenges on their own is very challenging. Bringing them both together increases that, but it's the task that we're looking to support with today. So if we could move on to the next slide, I'm going to invite us to start with Anastina, and she's going to provide an update or a basic run through of what's going on with CSRD, and then an update to the latest on the methodology.
Yes, thank you. So just to kick it off with some general context, and probably you already have the general information here, but the European Commission has introduced the CSRD, so the Corporate Sustainability Reporting Directive, amending the former NFRD, so the Non-Financial Reporting Directive, which was back then adopted in 2014 for the first time. And the primary objective of this amendment of this new CSRD is to ensure that a larger number of companies are required to report on sustainability information in a more profound, transparent, regulated manner. And the CSRD extends the scope of the NFRD as it will affect much more companies. At the moment, it's expected that at least 50,000 are being or will be obligated to report. And besides that, it's already also expected that market pressure will lead to organization following the CSRD without being legally obligated to report. What does it mean? So, for example, this could be in response to investors or societal pressure, or also since reporting companies, which are obliged to, will need more accurate data from their suppliers to meet the disclosure requirements, which will then accelerate the application of the CSRD all along the supply chain. Looking a little bit further into the scope on this side, on this page here, it applies to all companies listed on EU regulated markets, and then also to a large EU organization that meet at least 2 out of the 3 criteria listed here, which are more than 250 employees, having more turnover that exceeds 40 million euros, and a balance sheet that exceeds a total of 20 million euros. The directive also applies to listed SMEs, so small and medium enterprises, taking into account their specific characteristics. For non-EU companies, the requirement to provide a sustainability report applies to all that are generating a net turnover of more than 150 million euros in the EU and have substantial presence, so at least one subsidiary branch in the EU. If we go on to the next slide, I will try to keep it short regarding the timeline, but as you can see here, they first published the first proposal of the CSRD in April 2021. Then the CSRD entered into force on January 5th of this year, 2023. And currently the timeline for the application of the regulation and reporting start dates are divided into 4 main stages, with the largest companies that were already subject to the NFRD starting in 1st of January 2024, with their first CSRD report to be published in 2025 for the financial year 2024. And then after that, the phased approach will follow based on the criteria I presented on the previous slide. Now, coming to the recent updates from earlier, if we go to the next slide, just another key fact, another like explanatory disclaimer in the beginning. The CSRD is a directive, so it's the legislative act itself that set out the goal that all EU countries must achieve. So the CSRD, this legal text, does not provide detailed disclosure requirements, but these requirements are described in the European Sustainability Reporting Standards, ESRS. So there are always a lot of abbreviation in the coming, but these ESRS are mandated by the directive. So the first set of draft standards were created last year in 2022 by the European Financial Reporting Advisory Group, EFRAG. And then on 9th of June, the European Commission published a draft delegated act that sets out the ESRS in its annex. And currently the draft act is open for public feedback until the 7th of July, and then the Commission will consider this feedback received before finalizing the standard as delegated acts. And then those delegated acts will be submitted to the European Parliament and Council for scrutiny. What everyone is obviously now interested in is to know what has changed when comparing the draft standards published by EFRAG in November. And the biggest discussion has been around the double materiality assessment. Because before, in the November version, how we often refer to it, is that climate change, as E1, for example, and partially the social standards were mandatory. Regardless of the sector you're in or the size of the operation, these were mandatory to report on. Now, with the new delegated draft act published on beginning of June, all standards and respective disclosure requirements will be subject to a double materiality assessment, and only ESRS 2, the general disclosures, will remain obligatory. So this was the biggest change, which is heavily discussed at the moment. There are some further phase-in requirements that we summarized here, but I would rather continue if we go also on the next slide, please, just to sum it up. This publicly submitted feedback can be accessed by everyone. We also included the link in our slides. And it's actually quite interesting to see both organization or public institution, but also just regular EU citizen criticizing the current changes. So we are very keen to see the update and final version that will be published. Apart from those standards, what's coming up as well is that for the SMEs, there will be the option to report in accordance with a separate set of standards that will be adopted probably by end of June next year, 2024. Then there's also been the request for additional guidance and educational material, for example, to address the double materiality assessment, as currently many companies feel overwhelmed. Then what is also to be considered is that the regulations around the ESRS will enter into force 4 months after its date of adoption, and it's binding it in its entirety, so it's directly applicable in all member states. The application start that I presented on a previous timeline will remain January 1st, 2024 for the companies that were already subject to the NFRD, and all the other phased approach will also remain the same. Yeah, so that was all regarding the update, and I will keep it short on the following slides, so we will make sure to have some room in the end for question. Summarizing some of the key requirements that you see here, what we are doing now in many consulting projects is, for example, to conduct a double materiality assessment, as many are more familiar with just the impact materiality assessment in line with GRI. This will be, as you've heard on the previous slide, a very essential and obligatory part of everyone's sustainability reporting process. But also another area where we currently see a lot of demand in consulting, so it's been quite a challenge for companies to prepare, is the reporting of their Scope 3 GHG emission in line with the ESRS E1 standard, which used to be mandatory, but it's now subject to the company's materiality assessment. Then also the digitalization, and my colleagues will go into more detail here, but the CSRD will require companies to report the sustainability information in a clearly identifiable section of the management report to enhance the interplay of financial and sustainable information. It has to be in XHTML format in accordance with the European Single Electronic Format, so the ESEF regulation. And the tagging of sustainability information is also required. All this is in line with the digital finance strategy of the EU and aims to enhance the data for the financial sector as well. Last but not least, listed here, the CSRD will require the external assurance of the reported information by an accredited independent auditor. So it will be a limited assurance in the beginning of the application of the CSRD, but the aim and what has been communicated is that it will move towards reasonable assurance in the near future. Coming to the last slide from my side for today is just to give you a brief insight. We talked a lot now about the ESRS, and this is the structure of it. So these ESRS documents are publicly available by the EU Commission, currently still in draft status, but it's the same structure, like this architecture that you see here, like the version in November from the EFRAG, and they set the overall architecture of the future sustainability reporting under the CSRD. As you can see here, it covers the full range of sustainability matters, and also includes appendix with detailed description, graphs, and tables visualizing the requirements. So that was all from my side in terms of general introduction updates, and now happy to hand over to my colleagues again.
Thanks, Anasina. I mean, I'm just struck by how fast-paced it's all moving, right? So, I mean, I think you said November was the date of which we get the final version. It seems all quite last minute, but that update that you provided, it seems like there's a watering down of the standard, removing that mandatory element. Kind of, what's your personal opinion of that? And do you think in that consultation you mentioned, do you think it might pivot back in the revision, or do you think this is going to be the standard they're going to go with?
So we have also been quite disappointed, and I think many people use that term, right? Especially around the topic of climate change, as it is in everyone's mouth, basically, and exactly to remove this obligatory around climate change is definitely, I mean, your words are also probably accurate, watering down, as the scope 3 is definitely a challenge, but from our point of view, a necessary one. And we are very keen to see the final version. We hope that the reason why it might take a little bit longer now after the public consultation ends until the final version is out means that they are actually taking it into consideration, because otherwise they could just publish it 2 days later and say, well, public consultation is done, here's our final version. But let's see. And we think it's going to be in August, actually. So yeah, we are very, very keen to keep following the news around it. Yeah.
Great. Thank you very much. So we're going to pivot after looking at that kind of complexity of CSRD and all the granularity that it brings. We're going to pivot to the digital approach for a second, and bringing in Xavier. So part of those foundations of any digital approach to manage CSRD or other ESG reporting requirements is to have a robust data management system. Xavier, so if you could perhaps take us through from a high level view in terms of what you think a robust data management system would look like.
Yeah, thank you, Sandy. And so if we can move to the next step here, what we see is that the main digital approach is to reuse what you already have. So one of the big things, of course, is to avoid people to re-input information that is already sitting somewhere in some IT system. And so when we say robust, it really is a key part of that, where you already pick up data already existing. And for the rest of the data that is not yet existing, well, usually there are plenty of different players here. And so it can be internal, but also external people like suppliers. The main element here when you want success is to have a very simple approach here for the input. And if we go next, what we see is that it's not because it's simple that it's accurate. And that's part of the CSRD. You need to control your data. And it's not because it's sitting in a system that it means that you trust that information. So really the control is key, and this is something you will have to provide to the auditors. Once you've got that, on the next step, of course, you need to provide feedback to a lot of different people. So usually we deal with large organizations that have very different structures, many transversal management. And so all those stakeholders need to have their numbers. And so part of that numbers here are the emissions, of course. And so it means that some content are needed to be able to transform the activity data into CO2 emissions. And this is part of also the question from the auditors in the end. And so here, digitalization is a great way because it allows you to have those feedback to be able to aggregate the information in every way you want. On the next step, of course, part of this is the visualization, right? So you need to give feedback, but in a visual way, and people communicate a lot through visual elements. So you need that part to be integrated. And the last point is the reporting. But in fact, the first line of report are the auditors. And so that's in the CSRD, but not only. If you look to all the other frameworks, that's exactly there in the same way. So before you report to the GRI or to CDP or to CSRD, well, the auditors will come in and check what you have done. And so you will need to provide all the controls that has been done to provide how you have transformed your activity data into CO2. And so when we mean robust, it's all those steps needs to be there to be fully sure that all the numbers you provide will be accepted in the end by the auditors. Sandy, back to you.
Thanks, Xavier. I love this slide of yours, Xavier. It always makes it look super easy and super straightforward, right? So it's a really nice, clear conceptual view of what that kind of robust data management system looks like. But we know when we talk to our clients, there's a huge piece of work to be done, right? So this is a stat from Boston Consulting Group that was done a couple of years ago, and it's a bit of a mind the gap moment in terms of where we need to go in terms of our digital approach and what we need to do. So they're talking about 10% of companies who are providing a comprehensive view of greenhouse gas reporting, and comprehensive is in scope, in terms of accuracy, in terms of frequency. But I'm always struck by the stat, how small that number is and how much work we need to do. So we've got this conceptual framework, we've got the driver of CSRD, we've got the conceptual framework of how a digital approach can look like, but we do have a lot of work to do with organizations across the globe to get this percentage up to 70, 80, 90%. So if we can move to the next slide, we're going to kind of pivot back. And these are some of the points that Anastina was talking about in terms of the key facts of the CSRD. And we're going to overlay in some of these, if we can click forward on the animation, some of the aspects that a digital approach can support with. So we've got, if we can go through in terms of the animation, we've got missing data, frequency, and also the last one should be kind of accuracy of reporting. So, you know, we're seeing CSRD, you know, requires moving into a performance management culture. So we're getting data rather than on an end of year looking back. We're looking at a weekly, monthly, quarterly basis. So we're needing more frequent data, which a digital approach is very good for. We're needing more data. There's a lot of missing data, going back to that 9%, 10% figure in Boston Consulting. We just do not have the data in, so we need to source a lot more data into our solution, particularly around scope 3. And as Xavier and Anastina were talking about, we need to improve that accuracy of the data. So if you're going to be doing assurance of these reporting, you're going to have more accurate data, and you're going to have workflows associated with accuracy. And if we're going to be having a digital package in CSRD that this data is going to be going out in, and the XBRL format, which is not yet out for CSRD, but is coming out soon, people are going to be able to do more with your data. So the old scenario of where people had an annual report, it was hard to interpret it. Providing this into a digital package means that people will be able to make decisions on your data in a much more accurate and in commonplace way. So all of this is going to be kind of driving a kind of digital approach. So hopefully Xavier is going to move on to a demonstration, and using these themes of frequency, missing data, and accuracy, go and talk to it a little bit more about and show us in a tool about how these themes can be delivered.
Yeah, thank you, Sandy. And so let me share my screen here. Okay, so well, you started with the frequency information, and that's the reality. And let's have a look to what is happening today. Well, let's take that first example here, where we are at the end of the year, we are looking back to our data, and we have set a target here, for instance, on water consumed per employees. And in fact, we see the green being above the target. So we should be below, we are above, we are at the end of the year, and that's too late. So increasing the frequency, of course, is meaning that we can have a look to this data in a more efficient way. Let's imagine that we do the same on a monthly basis here. So that's my 2022 data here. And in fact, if I'm looking there, I can see that at some point I have been above the threshold and continuously above the threshold. And the idea about the digitalization and that global process is that, in fact, if you have monthly data, you can become predictable. And the idea here is that I can forecast. So let's imagine here, well, I'm the same period of the year, and that's me now. And what I want to do is to look at the data and see how it will perform in the future. So for the moment, we are a bit below and a bit above, but the system is very happy to provide you with forecasting. And just run the calculation here. And well, the system is now telling me that, in fact, I will be above the threshold. And that's predictability. And that's the power, of course, of all digitalization here, is to provide that kind of feedback. If you want to influence the results, you need to increase the frequency of the information you are gathering. And the system here is very easy, where you can forecast all those elements. Now, there was the second point, which is the accuracy and the auditability. So for this, there are plenty of situations. And in fact, it is a very, very large topic. So let's imagine first that, well, I'm someone responsible for collecting the information. And when we want to control the information, well, we mean that we check for deviation, we check for outliers. We want to have evidences collected during the process. So for instance, here, well, if I try to input something like 50 kilowatt-hour, the system is telling me that there is a significant deviation. This is the control. Of course, controls need to be, let's say, intelligent. You cannot control the same information in the same way for all the different locations, all the different business you might have. So you need to tweak this, of course, to the different situation. But in a digital process, this will be controlled. Now, of course, I said at the very beginning, if you check for the robust process, it means that you also might have automation. And you need to control in the same way this piece of information. It's not because it's imported from another system that you trust the value. So what does it mean here? Well, you can have things like this check here, where you've got rule validation, and you want to make sure that everything is checked by someone. And so here, whether it's automation, whether it's manual input, people will have control over the entire process and their data. Now, it's not enough. And so even with that, of course, there is always the question of back and forth between the different interlocutors. And so with a task management system, people are able to say, hey, my data is wrong, I need to correct this. Or please provide the correct evidence, attach the proper bill, whatever it is. So in the end, of course, and again, it's coming back to the auditors, people will be able to check all those information, how the information has been obtained. And let's go a bit further, because of course, a lot of systems provide dashboards and task mechanism. Let's see what we can do to go a deep further down. So here, for instance, I've got my 2015 data for my scope 1 and 2 calculation. And when you look to the CSRD, that's really a key element that is coming, how you have obtained that number. And here, well, with digitalization, we can provide that kind of feedback, which is how you have obtained, how the system is calculating these. Well, in fact, here, this is my scope 2 plus scope 1 emissions. And in my scope 2, I've got a calculation formula. And well, in fact, this is even more complex because this is a calculation over calculation. And when we go to the very fine detail, for instance, our grid electricity, well, here we can see directly all the comments that was pushed by people, all the utility bill attachments that has been given for this element. And also, of course, you can have all the different emission factors that are used in the calculation. And as we are talking electricity, this can be location-based and market-based, so with very different emission factors for the different sites. And here, with the power of digitalization, this is something where you can just put that in the end of your auditors. They can connect directly to the solution. They can explore the data and how it has been calculated. So very, very powerful here. Now, as you said, there are other elements, and one is the completeness of the information. So, well, in this case, again, it's not because you have a robust process that all the people will have the numbers. Sometimes you are missing elements. Maybe someone is missing a utility bill. Maybe someone else has no information, for instance, around waste. And so here, in this case, we want to be able to extrapolate that information to understand the completeness of the information. So the first step of the completeness, of course, is to make sure that you can track the input and that everyone will input the data and validate the data. But that's the next step here. You may still have missing information. And so here, for instance, we are missing that landfill element here for one of the site. And we try to extrapolate these, but in a meaningful way. When I say that, what does it mean? Well, maybe you've got different locations with different kind of business. And when you extrapolate information, it has to be in a way that is relevant for the location where the data is missing. And so here, well, it's an office. So what I want to do is to take all my office and look for that material, maybe based on area of the site. And this is what I'm doing here with the area of those sites. And so with that, now I can calculate an intensity, and based on that intensity, I can now extrapolate that information. And now I can integrate that into my overall calculation, so I've got my final result. Coming back to the auditability piece. If you do that, you still need to provide transparency to your auditors. And so here, what is interesting is that with the digital process, you will be also able to provide that information saying, this is the estimate. So when we look to the total numbers, we understand which part is estimated, which part is coming from real numbers or other kind of elements. And you can do this for all the kind of data and including for your total scope. And so here, for instance, we see what we have as exact numbers, what we have as projected numbers, what we have as approximation, and what has been imported. And in fact, it's the majority of the numbers, because the further you go on that road, of course, the further you will import data from existing system. And so with all those elements and with the digital process, you gain time and efficiency. And of course, the next step is now to make sure that you can work on those numbers, improve, and set accurate target, and then achieve your targets. Sandy, back to you.
Hey, Xavier, if you can stop sharing your screen and we can get the slides back up. Brilliant. So I think Anastina is going to take us through the last couple of slides, and I can see lots of questions coming in. So we're going to make sure we have some time at the end for those two.
Yes, let's keep it very short here. And my colleagues also mentioned it already, but basically we, given the more extensive scope of the ESRS, of the CSRD itself, we can only recommend starting early to comply with the CSRD. And that's why we've also summarized the key takeaways and action items here to illustrate this three-phased approach that we usually suggest, starting with a baseline assessment, then going into implementation, actually collecting data, conducting the double materiality assessment, and so on. And then combining the result of the double materiality with your gap assessment. And in the end, it will be crucial to actually set up an according governance structure for the upcoming years. It's not a one-time thing. It's an exercise you will have to do on a yearly basis. And in the end, it's also important for the third phase here, the reporting start, to have in mind all the, not only the content related requirements of the ESRS, but also the more general specification of the CSRD that we talked about today, like the digitalization or third-party assurance. So yeah, that was all, like wrapping it up here. So happy to finish our webinar and go into questions, I would say.
Fantastic. And thank you for a wonderful presentation. I know we've had quite a lot of questions come in during the past 45 minutes or so. So we really do want to get as many questions in before the end of the event as possible. So let's jump into it. This first question has to do with firm dates and when the rule will be final. So do we have any specific firm dates, any actual dates? I know this was sort of this fall was alluded, there was a timeline alluded to, but and then further, are these final rules going to be pretty similar to the draft ones that are out?
So happy to take that question. I mean, we would love to have an official statement out there from the European Commission saying which day we can check their website and download the final piece of the delegated act. But this is not the case. But as I mentioned when responding to Sandy earlier, having in mind that the application start for the companies subject to NFRD have to start, like the application start for them will be January 1st, 2024. And having in mind that the regulation from EU perspective enters into force 4 months after its date of adoption. Now it's already the calculation easy done that it needs to be adopted in August to have this 4-month period in between entering into force and being on time before application start. And this is why we think it will be published in August, and hoping to consider the enormous feedback that was submitted around making climate change mandatory again, but that one is up in the air and currently we have no insight in there.
It's going to be a busy end of the summer into fall and winter. Sandy or Xavier, do you have anything you want to add before I move on to the next question?
No, that's good. Are there any other thing about the timeframes? Is that I mean, I know there's people on the webinar that are not in the EU, and Anna had at the start the timeframes for people outside of the EU, so they have a longer time frame. But if we think about the time it takes to think about your materiality assessments, think about your robust data management system, perhaps go to marketplace for a digital solution in RFP and then implement it, you know, it takes years to do that in a structured way that you're not rushed. And a lot of our clients, you know, are doing this quite last minute. So even for the companies that have a a longer time frame, like the US. Nana can remind us what the date is, but action now is, I think, still important for those companies too.
No, that definitely makes sense. You do not want to wait until the last minute if you could do anything now. And this kind of just brings me to the next question. Should we wait until the final standards are out? Obviously, there's, plenty of dialogue going on about this, but if you could just dive into some specifics of what people could do now, what companies should be doing at this point.
Yes, so from our experience, we already have many companies reaching out to us that already started their CSRD preparation in terms of either already doing the gap assessment themselves or seeking consultancy support. And we can only recommend to follow that example. And especially if you have not reported under any GRI or similar reporting constructs, then really the time is now to start, because if you're more immature, then obviously you have more work to do. So yeah, please don't wait any more weeks or whatsoever. Use the draft that is out there to get an idea and get the ball rolling, and then you can still adapt and adjust the details once it's finalized, which will be only weeks from now. Yeah.
No, great advice. So thank you for that. And I think we probably have time for maybe one more question. Again, if you have other questions for any of today's speakers, please feel free to submit them. We will pass them along to the team at Sphera. So this last question we're going to touch on is about reasonable assurance. I hear reasonable assurance is coming. Can you talk to us about the differences and impacts of this?
Yes, sure, absolutely. So maybe it makes sense to briefly clarify. So limited assurance is often referred to as a negative conclusion or so-called opinion from the auditor. So basically the auditor have to say that nothing indicates that the information is misstated. So of course that also means that they will review your data and your processes and so on. It does not mean it's like easily done, but nonetheless, only additional work will arise if they have identified an area where a material misstatement may arise. Whereas in reasonable assurance, it's like a positive conclusion. The auditor has to obtain sufficient evidence to conclude that the information is prepared in accordance with the reporting criteria. So it requires from the very beginning a more extensive procedure and more detailed evidence and so on. At the moment, there are no official standards out there from the EU that are guiding the auditors. Those are expected. So these standards that would apply for limited assurance engagements are expected to be adopted by means of delegated acts only in 2026, which means that the assurance providers until then have to design and perform the procedures appropriate in the circumstances and the purpose of the engagement.
Fantastic. And before I wrap it up, I just wanted to thank the team at Sphera for being here today, for presenting such valuable information that is applicable to not just, a European, but a worldwide audience. And I want to give our three panelists the last word before we close it up. Any parting words that you'd like to leave our attendees with today? Sandy, I'll start with you.
Thanks. You had a slide before, but we have a Scope 3 survey. So if people would like to take that survey, I think that would be great. But I think kind of the message is that the kind of CSRD is going to become one of those regulations, adding to the ones that we have, and that improvement of accuracy and scope of reporting, I think, is going to be absolutely critical going forward. The standard of reporting right now, I don't think is very good, highlighted by what Anna was saying in terms of the methods for the auditors to view them are in development. And I think we're going to see this massive game changer going in terms of the quality of reporting going forward over the next couple of years.
Fantastic. Xavier, you want to piggyback onto what he said? You're on mute.
Sorry for that.
Happens every time.
Absolutely. No, my point was more, on the starting point of the journey. When we talk digitalization, this is also helping because there are predefined content there which can be leveraged to start directly and immediately without waiting for having like a full understanding of absolutely everything, which is taking some time. This is something that you can start immediately with the proper content.
Fantastic. And then Anastina, I know you gave a lot of answers during the during our Q&A, but is there any parting words you want to leave us with before I close it up?
Well, I can only agree to what my colleague said, and since there's so many dynamics out there, like feel free also to keep following Sphera. There will be more webinars also around other topics, obviously other updates that are coming, and thanks for joining today and your attention.
Oh, and thank you again for the team at Sphera, and we appreciate everybody who was able to join us today, as well as those who are going to be watching this on demand. And at this point, we're going to conclude the webinar, and I hope everyone has a wonderful day. Thank you so much.
Thank you.
Thank you. Have a good day.